Okay, so cash. Cash, credit card, checks, and EFTs. It's a form of payment, but it's also for us to pay for things, buy things, but it's also a way that we receive money as well, okay? Because we can also have these options to receive money from our customers, okay? So, of course, we're going to talk about all four of them. Let's talk about the first one, which is cash. As we know, cash is the most easiest and simplest form of you know transferring and trading for to buy some goods and some services, right? In the United States, of course, we use the US dollar. It is the most easy transferable money, right? Because that's the whole purpose of trading, right? We're buying items and we trade it with money. Money is our way to be able to uh, get the items that we need or sell the items that we need to the public, right? So cash is the simplest and easiest form of way to trade for goods and services. Okay? And it's the most easy, readily available too. So again, cash is the most easiest because all you need is, a wallet or a bank account, right? And you'd be able to have cash instantly. Right? Then let's talk about writing a check. Okay? Nowadays, writing a check is not as common anymore, but that's okay. I know a lot of businesses do use checks because, again, it is a perfect transaction or a type of, what do you call it? It's a great way to track your spending. Okay? Checks, especially when you're doing business with another business, right? You want to make this like a paper trail. So that's what checks do. Checks is a form of a piece of paper that takes money directly out from your bank account. Okay? So this is another way of paying somebody, but here's the thing. There's a lot of rules and regulations on a check. You have to have all of these things met before a check can become valid. Okay? So of course you need the person that you're paying, right? Who are you paying? It has to be the exact name, whether it's company or whether it's an actual person. You have to put the legal name of that person in order to transfer the money to their bank account. Okay? Two is you need the amount. How much are you going to pay them? Okay? So you have to write it out and have the dollar amount on there. Third thing is, or second thing, you need a date on there. Okay? And we'll talk about the date in a second. Fourth thing is, of course, you're going to have your account number, right? That's the main key point to this is that you have to have your check number at the checking or routing number, your bank account number at the bottom of the check. And then last but not least, you need a signature to authorize that this check is, going to be taken out of your checking account. Okay? Now, the thing about checks is, yes, it's a form of money. Yes, it's readily available. Only difference is they have a holding period. Okay? Especially when you receive the checks, okay, and you deposit it into your bank, it takes at least 2 to 3 days to process because, again, it's trying to read this checking number, the account number, the routing number. It's trying to transfer the money from one bank institute to another bank institute. It's not an instant form of transaction, okay? And also, when I say by the date, you can actually predate a check to have it prevent from other people cashing it out early or cashing it out late. So in this case, so most paychecks, right? You might receive it on Wednesday, but it's not available until Friday. Okay, so that is one method that you can use to help you manage the money that you need to make sure that you have enough money in your bank account for that check to be able to be cashed out as soon as Friday, as soon as the date hits. Now, second thing too that we need to know about checks is they have a long holding period. So in this case, based on the date that you put on there, you have up to 6 whole months to cash out that check. Okay? So that's a huge thing there. So that's why when you write a check out, it is a little messy just because you have to keep a really good track record of it. And the great way to do it is the check number right here at the top right corner. Every check has a number written on it. So therefore, you could see where the money goes when it leaves your bank or when it enters your bank, okay? Same thing when you receive checks from other people. You have the check number on there, okay? So you can see whether the money cleared or whether it's pending for authorization or pending to be deposited into your bank account. Okay. All right, our favorite ones, credit cards. Okay, now we live in a great society where it's so much easier to just carry around a plastic piece of card and swipe, right? Because again, we live in a more digital age now where we don't need to carry cash, because cash can be a little, depending on how much money you have in your wallet, right? If you have a lot, your wallet's going to be fat. If you have too many and you don't want to carry a checkbook everywhere you go, because you're going to have to carry a pen and so on and so forth. So the easy feasibility of today's society is to use a credit card, okay? Because it's an easy thing to carry around, and again, everywhere nowadays are most likely to be accepting some kind of form of credit card payment. So again, here are the major credit card companies. Of course, we all know Visa and MasterCard. Those ones are widely used throughout the whole world. You have Discover and you have American Express. Now, again, these are all credit card companies. So here's something that we need to know. This money is not yours, okay? That's why it's called a credit card, right? These things that you have to know is that you will be charged if you own a credit card. You are actually essentially borrowing temporary money from a credit card company, okay? Or in this case, you're borrowing a small loan. And what this does is not only is it something that you're going to be borrowing, you're going to be paying back with interest, okay? So that's the one thing that we have to know is that, yes, it is very, very easy to just go ahead and spend, but know that every time we spend it, we're racking up extra money on top of that because we have to pay interest back on top of every purchase that we make, right? So that's the thing about having this. So you don't necessarily have to have money in your bank account, but having or owning a credit card can also be trouble as well because you're borrowing more money than what you normally shouldn't have, that you don't have. So in this case, that's just one thing. And here's what you need to know when you are receiving credit card payments, okay? So of course, us using the credit card is very easy, very feasible, right? Now, any merchant who accepts these credit card companies, right? So everybody knows that you have to buy that credit card box thing so you can swipe or you can, whatever it is that it is now, to be able to transfer the money and it goes straight to your bank account, right? These credit card companies, they charge you as a merchant because what they're essentially doing is they're allowing the customers to borrow money from these credit card companies, and you are borrowing their services to collect the debt for you. Okay? So again, when we dive into receivables, you'll understand what I mean. Because here's the thing. When we allow our customers to owe us money, that becomes a liability to us because we don't know if this customer is going to for surely pay me back, right? It's a risk that most businesses like to do. And that's why we have the ability to also charge our customers interest on that if you don't pay. But the thing about that is, that's one thing that these credit card companies do for you is, hey, to give you some relief, I will forward you the money right now and have the customer owe me instead of you. But it comes with a price. Okay? So again, these major credit card companies are making money both off of you as a customer and off of you as a merchant. So again, the thing about having credit cards, allowing to accept credit card is you do have to pay that extra service fee. Okay? Now, again, I don't know if you've ever talked to any individuals who do accept credit cards. They tell you, no, don't use your credit card. I want you to Zelle me the money. I want you to give me cash instead because you get 100% of the money. If not, most oftentimes these credit card companies, right, they either charge up to a percentage of your money or they charge you a flat rate. Okay? So again, you're not getting 100% of your money. You're getting maybe 95 or even 98% of your money because you have to pay the convenience charge to these credit card companies. And the more you have available, the more money that you have to owe to them. Okay? So that is a trade-off, right? They're helping you instead of going through the headache of keeping track of the people who owe you. They take that for you and they forward you the money as soon as possible. So again, it's positive because you get the money instantly. That's what credit cards are, right? That you get it instantly. However, you have to pay a price for that. Okay? Now, again, in this case, I don't mean by instantly, but usually credit card transactions are almost instant. It usually takes about 24 hours and it would clear. But again, if it's over the weekend, that's where it's at 2 to 3 business days, right? If you charge something on Friday night, it won't process, or it will process, but it won't show up on your account until Monday morning. Okay, so they're just like any other bank institute. They follow the same guidelines. So that means if you charge something on Monday, of course it will appear the next day on Tuesday. But again, these credit card companies are also working year-round as well. Again, they are a Monday through Friday type of ordeal as well, just like the Bank Institute. Okay? And then, of course, again, it is money that you owe to these credit card companies. Okay? And then, of course, we're going to talk about things that are widely popular nowadays, right? Because in this case, you don't need cash, you don't need to carry a check, you don't even need to carry a credit card. All you need to do is have your phone. And this is mostly for smartphones or having the internet. Because this is the easiest feasible way to transfer money through the internet. Okay? So this is called EFTs, which is also stands for electronic funds transfers. Okay? So EFT for short. And this is where popular nowadays, I believe it's been around for like maybe 5 or 6, 7 years now. All the bank institutes are now using Zelle to be able to help you transfer money from bank account to bank account. We have other apps such as Cash App, Venmo, and then even a direct deposit itself. You go into the bank and directly deposit from one checking account to another. So again, the vast majority of having technology is that now we're able to transfer funds almost instantly, and it is instantly with these kind of transfers, because you're transferring from one bank account to another electronically. You're wiring it to their bank account, okay? And this is an instant transaction, so that means if you're sitting there and you transfer money, it goes straight to that person's bank account immediately, and it clears right away. So That's the beauty of having technology, right? And of course, and you can, for anybody who owns a smartphone device, whether it's Android or iOS, iPhone, you can download the mobile app and be able to transfer money just in the palm of your hands. So think about that. Think about eliminating cash, check, and credit cards overall. You can use your phone to transfer money instantly. Okay? And nowadays, you can, instead of carrying a credit card now, I know that iOS devices, iPhone users, they can carry a digital wallet where they can scan their credit cards, their bank cards, or whatever card that they want directly on their phone. Okay? So you don't even carry anything except for your phone, which is something that people do carry around. It's a necessity, right? Or now it's become a necessity. So in this case, we're living in the digital age where it's come to the point where we've eliminating having to carry cash, we eliminating having to carry a check, and now we're eliminating having to carry a credit card in general. Everything could be done through the palm of our hands. So the easily transferability of electronic funds transfers is being widely popularized right now. And you know what? It might be even soon to even become this way, right? All right. So now we're going to talk about something that a business may or may not need. So we talked about how we can receive a payment and how we can make payments, right? So this is part of the business that some businesses need in order to pay for those minor business expenses, right? Is a petty cash, okay? Because sometimes not everybody can be lucky enough to have a business credit card, right? Especially because who's going to be authorizing it, right? Of course, you're going to be authorizing it, but at the end of the day, you or your employee it's going to be handling that business credit card. Well, here's a different one that you can utilize instead of a business credit card is having a designated petty cash fund. So what it is it is a physical lockbox, right, that actually has cash in it for minor business expenses, okay? Of course, you need to create a ledger account for it if you potentially want to have a lockbox available. But this is, again, it's for anybody who doesn't have access or permission to have a business, to be able to use the business credit card, right? They can use the business's cash money in the lockbox to pay for the minor business expenses, okay? So a great example is that if you have some kind of company that, maybe they need to print stuff, right? And because when you go through that kind of stuff, right, usually you go through purchasing, you buy in bulk, you buy reams of paper, right? But sometimes you'll get to the point where, oh, I did order paper, but right now it hasn't shipped yet, and we only have a couple sheets of paper left. So someone needs to go run down to the local office supply shop, get a couple reams of paper to go ahead and print for now until the shipment of paper actually arrives. That's a minor business expense because that's something that you need for the operations. Well, who's going to pay for it? Okay? Certainly, yes, you can choose an employee can choose to pay for ahead of time and be reimbursed for it. But then at the end of the day, you remember, you are not paying for the expenses for the business, okay? Because you're just the employee. You need to be reimbursed for that, okay? So make sure that you do understand that. But in this case, that means that's exactly what the petty cash drawer is for. It's for when you occur those minor business expenses and you don't want to use your own money or have to wait to be reimbursed for it, then you're going to go ahead and use a lockbox to go ahead and be able to take the money that you need, buy the things that you need to buy, and then come back and put the money back into the drawer. Okay? So that's essentially what this lockbox does. Okay? And of course, again, usually what's inside the box is usually going to be, if you choose to have the lockbox, I do recommend a lockbox for a business credit card. You don't want a business credit card to just be lying around. So there you can have it. You can use it for reimbursements, and you can also use it for to hold all your cash receipts. Okay, so again, that is so a great example of this, right, is a cash register, right? It holds money, but in this case, the cash register has just one simple difference, right? You're adding money to it, not subtracting money to it. And we'll talk. We'll go ahead and explain both scenarios. But in this case, that would be a perfect example, right? What is a lockbox that has cash in it? A cash register. Okay. So let's take a look at an example here where we need to establish a petty cash fund. Well, how do you establish a petty cash fund? Well, first things first is you have to go through upper management, of course, go through the boss and go through your accountant to see what is the best amount that you want to designate to have minor business expenses. Okay, so in this case, right, maybe you need to pay for delivery fees, right? We talked about COD, cash on demand. Cash on delivery, right? So therefore, maybe that's something that you need the cash box for. Again, you might need to buy some office supplies so you can have some pens around the office or some paper. At the end of the day, you need to discuss what are the possibilities of having these minor expenses. And therefore, you're going to establish an amount that you're going to have in a lockbox. Then, of course, you're going to create your ledger account, right, as soon as you finish journalizing. Okay? So in this example here, on January 5th, you establish a petty cash for $500. So in this case, where is this petty cash money going to come from? Okay? Here's what we have to talk about. This money does not come anywhere else except for the actual company bank account. Why? This isn't a place for you to just dump your loose change in. Okay? This is a petty cash drawer, not a savings drawer, okay? So in this case, that's what you have to know. This money is coming from your actual checking account. Okay? That's how you establish the amount of money that's in the petty cash drawer. So then you're going to write a check because, again, you need to make sure that you have the exact change, right? You need to know if you have the exact, exact $20, $5, $1 bills, right? Enough to be able to make that, minor expense, right? Now, of course, once you have done that, right, and you journalize it like this, right? Because petty cash is essentially your money. It comes from your checking account, and it's another lockbox for you to spend money for minor business expenses. So at the end of the day, this is another small bank account, right? Because the money comes from the business. So you're going to debit your petty cash, and you're going to credit your checking because it's going to come from your checking account. So once you've done that, this is what the ledger is going to look like, right? You're going to have your petty cash ledger, and this is the first thing you're going to write in there is that you're going to establish the petty cash fund. In this case, there you go. You have a positive $500 debit amount in here. So your petty cash drawer has a balance of $500. Okay. Well, how do you spend the petty cash fund? Well, that's a good question. Well, here's what happens. So you have a lockbox that has $500 in it. So how do you use it? You're going to have someone who's going to be in charge of the petty cash drawer, of course. And that person is going to record every time someone takes money out from the lockbox. And they're going to also record how much they spent and how much they brought back. Because that's the important thing is that this is not your money. This is the business's money, right? So if you're taking a $20 bill, that doesn't mean whatever change that you have left, you get to pocket it. No, that's not a use to pay yourself as an employee, right? That's called stealing. You're stealing money from the company, right? So what the rule is here is that when you go ahead and talk to the petty cash drawer manager, they're going to record the date, the person who took the money, the amount that they're going to take out, and you are expected to return with the receipt and the exact cash back, exact change, right? Down to the penny, right? And then that money is going to go back into the drawer for someone else to use for their minor business expense. So essentially, so you're trading out whatever money that you had, right? And then that receipt's going to also go into the lockbox. So at the end of the day, the lockbox will always have a balance of $500 or whatever you establish your petty cash drawer to be. Even though now that you spent the money and now it's full of receipts, the receipts total up the total amount of money that you spent, plus the cash that you have in the petty cash drawer. So that's essentially the purpose of it, is that you are keeping track of all the money that's being spent, and that lockbox should hold the same value that you establish your petty cash drawer at all times. Okay? So in this case, yes. So the most important requirement of having a petty cash drawer is having and an accompanying receipts at the end. It's going to match the total amount that you started out in the petty cash drawer with. Okay, so that's the very most important thing. Okay, so here let's take a look at an example of what a typical petty cash register looks like. Okay, so you can refer to this as a register, a ledger. Okay, this is separate than from your actual accounting ledger. Okay, this one is what whoever is in charge of the petty cash manager is. It's their way to keep track of all the money that's leaving and entering. So in this case, right, we on January 1st, right, we established our petty cash drawer to be $500. Okay, then we see here that on January 10, Sam, our employee, decided to take some of the money to buy meeting supplies. So maybe they need to buy paper, pens, et cetera, right? So they decided to take $25 out from the petty cash drawer. And when they came back with a receipt saying it was exactly $23.85, and they gave us back the exact change of $1.15. So what you're going to do is you're going to put that back into the petty cash drawer, right? So now, how much cash do you have left remaining? Well, we only have $476.15 remaining in terms of cash, plus the receipt for $23.85. So as you can see, right, in this case, we're actually looking at how much money we're spending. And of course, every single amount that we are looking at is someone's taking an amount, they're bringing back a receipt with the exact change, and it's adjusting the amount that's in the petty cash drawer. But check this out. At the end of the day, right, you have a total receipts equaling $443.18. So we're at the end now. And at the end of that, then now we have a total cash remaining of $56.82. Add those up together, what do you get? You get $500, which is exactly what you established the petty cash drawer for. Okay? So now, my petty cash drawer at the end of January is low on cash and full of receipts. Okay? So that's how you spend the petty cash drawer money, is you just take what's in there, and then you bring back the receipt with the exact change, and slowly the petty cash drawer begins to get smaller and smaller and smaller in money, and bigger in receipts. Okay? So in this case, right, now that we established that, we now need to identify, okay, so now we're low on money. How do I replenish that petty cash drawer? Well, in this case, right, this is how we replenish it. But because we didn't record any of those transactions that were in that lockbox, is because that's the purpose of it. That lockbox gets filled of receipts for a reason, because you don't recognize those expenses until your petty cash drawer is low, right? Because then what's the point of having a petty cash drawer when you can collect that receipt right then and there and record the transactions right then and there? So the purpose of having a petty cash drawer is at the end when you need to replenish the petty cash drawer because it only has $56 left in the petty cash drawer, right? You need to replenish it so then the next time someone needs to take money out from the petty cash drawer, they have enough for their minor expense. So in this case, what happens is this is your rule of thumb. You're going to end up opening the cash box, the petty cash drawer. You're going to take all the receipts out and you're going to look at every single expense and you're going to categorize them based on what those expenses were, right? You're going to recognize those expenses later, right? Or you're going to recognize those expenses and categorize them right then and there, okay? Once you've gone through all of that and you for surely have it all organized and you journalize it, right? You replenish it by taking all of those receipts and basically convert those receipts back into cash. How do you do that? You got to take more money out of your checking account for the exact change. So then when you put that value back into when you cash this out, right? And you put that money back into the petty cash drawer, guess what? We are back at $500. So that's the rule of thumb here. When you replenish your petty cash drawer, rule of thumb is this is where you're going to end up recognizing all of your business transactions. Okay, so again, notice this, right? We had a transaction on the 10th, the 18th, the 20th, the 25th, right? But we don't recognize it till January 31st because, again, those minor business expenses, they will eventually get recorded. But the only thing here is it's just because my petty cash drawer is low, that's when you recognize those expenses because they did occur. It's just because you were having a temporary account to keep track of that. And that's exactly what a petty cash drawer does. So in order to get that money back into the petty cash drawer to be full again with $500, you're going to count the total number of receipts that you have in total, and you're going to write a check for that entire amount. So what you're doing is you're counting all the receipts, and you're replacing all of those receipts with a check written out to the petty cash drawer for the exact amount. So then when you put that money back in, you end up with the total amount that you began your petty cash drawer with. And that's how we use the petty cash drawer. Any questions? No questions?
No.
Okay. So what, of course, as we go, go through a business, right? Sometimes whatever you establish your petty cash drawer might not always be enough, especially when you started out in the very beginning, right? Because you don't know how many minor business expenses that you could occur. So in this situation here, right, on February 5th, you decided that you need to increase the money because in this case we were only left with $56. What if someone tried to take the money from the petty cash drawer and it wasn't enough? So therefore, now we're deciding, okay, we need to increase our petty cash drawer. Okay, so right now, after I replenish it, it currently has $500. We already established that $500 just wasn't enough for the minor business expenses. So how do we increase our petty cash drawer? Well, after you discuss what the total amount you need, let's say you want a grand total of $700, $750, right? So then, now that your current petty cash drawer already has $500, so how much more do you need to add to it to get to that $750, right? So in this case, you're only going to be adding what extra amount you need to get to the goal of your total petty cash drawer. So in this case, I'm going to add an additional $250 to my petty cash drawer so then I now have $750 in my petty cash drawer at all times. So that's exactly what we're going to do. Now in this case, notice this. Notice this. How come when I was spending the money, how come I wasn't taking it out from my petty cash drawer? That's because you never use the petty cash drawer for the transactions. Why? Because this is your means to increase, decrease, and increase and decrease. You don't want that to happen all the time, because then you're never going to know what your true balance in your cash, your petty cash drawer was at all times, because you keep decreasing, increasing, and decreasing it, right? So that's why in this kind of situation, you normally do not take away money from a petty cash drawer unless you are either decreasing it or closing it out. So that's the rule of thumb there. You don't directly take money out from the petty cash account when you are spending the petty cash. Okay, so that's a huge, huge thing that you need to know. Okay, you only use the petty cash account when you are establishing, increasing, decreasing, and closing out. Right? So that's why this is like this. So now I need to add more money to my petty cash drawer, and I'm adding $250. So here's my ledger. Okay, so there you go. I'm going to increase it. So now I have a total amount of $750 in my petty cash drawer to have available to use. Okay. And of course, we did February's expenses here. So this is already here. So then I racked up a grand total of $178. So this time maybe February was just one of those months where you didn't spend that much money. Okay? So therefore, I replenish it by saying, okay, well, February is over, so I still want to put the money back into there. So I'm going to calculate the total of my receipts, put them in the respective account expenses right here, respectively. Right? So we bought some office supplies, we had some delivery fees and some business supplies, as well as party supplies and coffee for a meeting, and then so on and so forth. And then, of course, we go ahead and write a check for the total amount of receipts that you have. Okay? Then, again, let's say you decided to adopt a business credit card, so you need to close out the business petty cash drawer, because you don't need a petty cash drawer to be there anymore. You have a business credit card. So what you're going to do here is you're going to take all the money and you're going to, how do you close it out? Well, if you know you have $750 in your petty cash drawer, you're not going to pocket that. Where does that money go? Since it's the business bank account's money, you're going to put it right back into the business bank account. And you're going to credit your petty cash drawer, okay, for $750. And that is where, when you put it in your ledger, you're going to end up zeroing out your balance, and then now you no longer have a petty cash drawer. Okay? Any questions in regards to using a petty cash or having a petty cash account, and so on and so forth?
No.
Okay. So again, this is something that you are going to have to make an executive decision, right? Does your business need a petty cash? Yes or no? Now again, there are a lot of problems of having a petty cash drawer, right? Because it's cash that's easily, readily available in a lockbox, right? Anybody can just go ahead and take the money and run with it, right? But in this case, that's why it's optional to you. If you think a petty cash drawer is something that you need, instead of having the boss there and cutting checks left and right, you know what I mean? At the end of the day, what kind of system works best for your company? Do you need a petty cash drawer? Yes or no? That's up to your decision. Okay? All right. But something that a business does need, again, because if we're going to be doing retail, is you need a cash register. Okay? So again, a cash register is very, very, very similar to a petty cash drawer, right? It has the same exact two features. It is a physical lockbox that has full of cash, and you need to create a ledger account. Okay? The only difference between the two is replenishing the cash. In this case, you do not ever need to replenish the cash in the cash register. What you do need to know is that you do need to keep track of the money that you are using in your cash register, because that's going to ultimately also match the total number of money that you have in your register, and you're going to take it out from what you have originally started in the cash register. So that's the difference here. You don't ever replenish the petty cash drawer, but you do use the receipts to make sure that your cash drawer does match the amount of sales that you've collected at the end of the day, week, whatever you do when you do a register. Usually it's always done in the morning, right? And it's done at the end of night. Okay? So, but it does carry on the same similar features as a petty cash drawer, because you are going to be establishing it, and the way that you increase and decrease is the same, and of course closing it out is also going to be identical. Only difference is the replenishing part is what's different. Okay? So usually when you decide to have a cash register, right, you and especially on the first week of sales, you really can't predict what your sales are going to be like. So you want to pick a friendly number, like establish a friendly amount to be able to have in your cash register at all times. So that's the key word, cash that needs to be in your register at all times. Okay, so in this case, once you've done that, you're going to journalize that you have money in a cash register. And of course, you're going to also create a general ledger account. Now, a cash in register, right? A lot of businesses use cash on hand instead. They're both in one and the same. Okay, but one of them could be just cash that you just have laying around in your wallet, or in this case, that's just how it is, right? It just depends on how you establish your accounts. You could call it cash on hand. In this case, I put it very specific, saying this is exact cash that's in a register. Okay. So this case, right, it is now January 5th, and you establish a cash register for $500, okay? You got some 20s, you got some 10s, you got some 5s, you got some 1s and quarters, dimes, nickels, and pennies, right? You need to be able to exchange money with your customers. So therefore, you need exact change. So again, you got $500 worth of all this change here, okay? And of course, you're going to pop it into your cash in register ledger account, right? So in this case, there you go. Okay, I have $500 in the drawer. Okay. Now, how do you spend the money in the cash register? Well, straightforward. How do you exchange money with your customers? That's exactly how you use the money in the cash register. Every time you make a cash sales, right? You collect the money from your customer, you collect the sales receipt, and you give your customer back the exact change. And what do you do with that receipt? You usually put it on the side. Okay? So, again, we're ignoring that you do not have credit cards available, and you only accept cash, then that's the easiest one. Okay, you usually with registers, you usually have some kind of system where you have a copy for the customer and a copy for yourself. Okay, and that copy for yourself is where you either go ahead and set it aside. So if you ever see those individuals who have those little stands where after a cash transaction has been done, they would put the receipt right into the pile and like hook it into like something there. It's usually right next to the cash register. That's so that they can count the money that's in the cash register at the end of the day. So that's how you use the cash register. First thing is you have to make sure that before you even start your register that you have the exact amount. Then as you go through your day, you have to keep a separation between your cash sales. So you're going to have a pile of receipts and you're going to be receiving cash from your customers and also exchanging them with the customers, okay? So again, you're going to be recording cash sales as normal. Do not add money with into the cash register, okay? Especially when you have those customers that say, "Hey, keep the change." Do not put that money back into the register. In most cases, that's why there's a tip jar in front of the cash register, because you never ever want to add that extra money back into your register because you will be out imbalance, as an out of balance. Your cash register is not going to match the total amount of receipts because that's extra money that the customer gave you. So you got to put it in a separate jar and then count that money as tips or whatever extra money, okay? So make sure you are aware of that. So then cash register, so how do you replenish it? You don't. Because at the end of the day, you're adding money to the cash register. So you're always going to have the original account balance of the $500 that you started with. And then of course, plus additional, because again, you're increasing your money flow because you're making a sale. So in this case, this is how we would replenish your your cash register, because at the end of the day, you know that you started on established that you started the morning in the cash register with $500. You're going to count the total number of receipts, cash sales receipts. That number should match the number of total cash that you have in your cash register. Okay? So your cash register is going to have $500, which is what you began with, plus the total amount that you earned from the cash receipts. So that is exactly why it's so important that you keep a hold of cash receipts to make sure that when you do accounting that this is correct, especially when you're dealing with cash, that you don't accidentally give your customer too much money or you don't accidentally give them too less money, right? So that's the idea there, because it's often mistaken that sometimes, sometimes those dollars, they do get sticky. Sometimes you end up giving your customer a little more than what they should be having back. Or even sometimes when you pay for stuff, sometimes the person's just so busy that they don't even notice that they would give you the wrong change. Okay? They might pull a $5 bill instead of a $1 bill. So again, that's why it's important that when you are dealing with a cash register, you have to keep a really good track record of where the money's going, because that is exactly what you have to do. So once you calculate your total amount of receipts, you're going to subtract the money from your register, and that should equal the total amount of cash receipts that you have. And what do you do with that money? Well, you have a choice. Most cases, you should put that money in your checking account. Never hold too much money in your cash register, because you don't know what will happen to your store. So one random day, someone can come to your store and they can rob you. So you're better off to make sure that the money that you are having in your cash register stays at a constant amount. So in this case, at the end of every day, right, what are you going to do? You're going to take the money, the extra money, and you're going to either deposit it, and then of course, or exchange it. So then you start back the same day or the next day with the same amount that you establish your cash register at, which is the $500. Okay? Any questions so far?
No.
So let's say, of course, your sales starts to increase. So what happens if you need to add more money to make sure that you can be able to exchange your money with your customers? So in this case, how do I increase it? So again, it's the same exact idea. You're going to increase your cash and register, and the money's going to come from your checking account because you need to go to the bank and get the exact change, right? And then when you increase it, this is what happens. So now you're increasing your cash register to have now a grand total of $750 in your cash at all times. Now, of course, if you're too lazy to go to the bank, yes, you can put the money from the cash sales into the cash register. It is up to you. Yes, you can do that because you did record that you had your sales. But at the end of the day, right, you just want to make sure that if you do so, right, you deposit whatever money that you have and you increase your cash register exactly how you need it. But this is the most best way to do it because it is the most legitimate way, is that you're going to take the money from your checking account because of course you need the exact change anyway. So making sure that you have the exact amount of money in your register at all times, the $750. Okay? And then of course, what happens when you need to close it. So everything's the same. So what happens if you need to close it because you decided to establish a credit card system now? You collect money via online payments, via credit cards, and you don't have a cash register and you need to close it, then simple, right? The money that is in your cash register is going to go straight into your checking account and you're going to close it out by crediting your cash and register, and of course you take it out and zero it out. Okay? So, any questions in regards to
No.
registers? Okay. So, of course, we've been talking all about petty cash drawers and cash registers. Let's actually talk about business credit cards. How do you use a business credit card? Well, of course, because we're living in today's society, a business credit card is going to be the most feasible thing to use instead of having a petty cash drawer, right? So again, oftentimes you will see that a business credit card, they do allow their employees to use it and authorize to buy whatever they need. So then instead of having to pay or replenish a petty cash drawer, the owner just simply pays the credit card, and the credit card has a limit on it. So in this case, yes, so there's no need to keep a really good track record of a business credit card because everything is already established for you. So in this case, right, same few things. Of course, you need a safe place to put the business credit card, right? So again, you need a lockbox to be able to protect that credit card because you don't want anybody to have access to a credit card. And then of course you need to create a ledger account for keeping track of it. Of course, you're gonna also have a receipt. But here's the thing: the credit card statement is already proof of your transaction, so you don't need to actually have the receipt on hand. But you should do it for your accountant because, of course, they want to make sure that when you spend the money, that they also keep track on their end how much money that they spent on the credit card, so then you can keep on using it. But at the end of the day, you already are going to be receiving a credit card statement anyways from the credit card company that's going to tell you a list of all of your transactions, and you use that for for reconciliations. So we'll talk about reconciliations in chapter 10.3. So that will be tomorrow's lesson. And of course, it's a liability because once again, a credit card is not your money. Okay. Um, it's you borrowing money temporarily from a credit card lender company. Okay. So again, a credit card can take place of a petty cash drawer, right? And it does the same thing, right? But the only thing is you have no need to establish it. You don't need to increase or decrease it, and you do, of course, need to replenish it. In this case, but you do that by paying the credit card off. But in this case, you don't need to do any of these things. Why? Let's talk about it. Why don't you need to establish a business credit card? Well, how do you establish a business credit card? The credit card company does it for you. Because remember, you have to apply for the business credit card, and they're going to take a look at your credit score, and they themselves are going to tell you how much you can be allowed to spend or what amount that you got approved for. So in this case, do you need to establish the credit card account? No. The credit card company itself will do it for you. Okay? All you do need to do is just create the ledger account for the credit card account. Okay, so in this case, on January 5th, you were approved for a Visa Gold credit card with a credit limit of $500. Okay, so in this case, I got approved of a credit card for $500. Do I need to record this?
Yes.
Why? You got approved for a credit card. Did I spend my credit card yet?
No.
No. So here's the thing that you need to know. That's why there is no journal necessary. Why? It's a liability. You just only got approved that you have a credit limit. But was there a transaction being done? The transaction is they give you a limit amount of how much money you can spend. But did you spend the credit card yet? Do you owe any money to the credit card company yet? No.
No.
Because you haven't spent the credit card yet. All you were approved here was just a credit limit. Meaning this is how much money you can spend. Now, if you don't spend your credit card, that means you don't owe any money at all. So that's the difference about having to establish a credit card is you don't need to journalize it as soon as you get approved. You don't need to establish it because the credit card company is going to establish it for you. So in this case, that's exactly why you don't need it. But yes, now you have a ledger. Of course, if you don't journalize it, your ledger account's not going to hold anything, right? But this is definitely something that you can put in the notes to the financial statements because you got approved of a credit card. You need to make a note that what was your agreement terms? When is your due date? What is the total amount of interest you're going to get? You're going to get charged every month. Or your annual percentage rate. Okay? That is pertinent information that you need to put into the notes to the financial statements. Because again, a business credit card is a small, short, temporary loan, right? You're borrowing money. And you're going to be paying it back as soon as you start spending it. So then how do you spend the credit card? Pretty straightforward, right? Everybody enjoys this part, right? All you have to do is when you buy stuff, you swipe and you're done. Right? And of course, when you make purchases and all you do to have is just a receipt. So that's all you need. That's how you spend the credit card. So that's why it's so easy to spend a credit card because you don't need to think very much. Okay, all you do is just take the card out, buy what you need to buy, grab the receipt, and that's it. So for instance, right, if on January 10 you decide to purchase office supplies for $56 and then you decided to use your business credit card, you do need to record this transaction. Why? Because it's a transaction. What did you do? Right? It happened on this date. And the way that we treat our liabilities is you just charged your credit card, so therefore you increase your liabilities. So that's exactly what you're gonna do. You're gonna recognize what you bought. So in this case, I bought office supplies, and I am going to credit, right, because I owe money now. I owe $56 now. And of course, then once you've done that, you're going to transfer that money amount into your ledger. So then now your credit card is going to tell you that you have an outstanding balance of $56. Okay? Even though you have a credit line of $500, you don't actually put that in here because you didn't borrow the $500 right away. You are slowly spending the credit card to rack up to that $500 limit. Okay? So there you go. You have office supplies. You spent the money for the business credit card, so now you owe $56. Okay? Now, how do you replenish the credit card? Well, of course, what happens when you use a credit card? You're going to be receiving monthly credit card statements, okay, in the mail. And it's going to give you a track record of everything that you spent on that credit card, okay? And guess what? You're also going to be charged interest, okay, because it's a liability. It was your terms that you agreed to for borrowing this money. You agreed to pay back plus interest, right? You agreed to pay back the money plus more. So in this case, it will give you a list of all your transactions here. So here it says that we had a total. We started out on January 1st, right, with a $0 balance. And at the end of the statement balance, which is usually at the end of every month, on the end of your, or whenever your billing cycle starts, right, usually the day that you get approved for the credit card is going to be your date that you start your billing cycle. So it doesn't have to be necessarily January 1st to January 31st. That's just how we got approved. But in this case, usually it is within 30 days of your billing cycle. So at the end of my billing cycle here, I end up spending $177.93. Right? Now, is that true? Well, let's take a look. My total purchases was actually $175.30. But because I got interest of 18%, right? Credit card companies are getting more expensive on interest. This credit card has an 18% interest rate. But again, interest rate, 18% isn't what they're going to be charging you right then and there. 18% is an APR, annual percentage rate, meaning that's the total amount that they're going to be charging you for the entire year. So you're going to take that 18%, divide it by 12 to get the total amount of interest you're going to be charged for that month. And then we'll talk about interest in tomorrow's lesson in chapter 10.2, where we talk about interest and the time value of money. Right now, that is exactly what I'm being charged here. I'm being charged $2.63. So that is exactly why now I owe $177.93. And here's the due date. It's due the 5th of February. Okay. So again, they give you a track record of all of your lists here. Now, how do you replenish the credit card? Well, you're going to have to make a payment to the credit card, right? Now, the great thing about having a credit card is you do have options. Credit cards give you a minimum payment. So you do have the choice. Are you going to pay it all off or are you going to make payments on it? So in this case, then of course, if you make payments on it, then you're just going to have that that amount that you owe get racked up and racked up and racked up, right? Yeah. So in this case, you have that choice. Now in this case, for this example, I'm just going to go ahead and pay the whole entire thing off. So let's take a look. Well, how come in my register it says that I only have $175.30? Because this is what you charged on your credit card. You didn't put in interest. Interest is a separate payment from the actual liability itself. So you have to remember that. So now, because you were charged $2.60 something for interest, right? This is the actual amount that you borrowed. The interest is a separate payment because that was your agreement. You said, I will pay you back what I owe you plus more. So that is why your ledger will only show less because then now you racked up interest. Okay? So then now you're going to put your Visa payable saying that I owe $175.30. Okay? But we know my billing statement says that I owe $177. So I need to now put in my checking account that I owe $177.93. So then where is that extra amount going to go? this is where you're going to be establishing your interest expense account. Because again, we talked about it. It's a separate cost that you have to pay the credit card company for borrowing this amount. And since you borrowed $175, you had to pay extra $2.63 for interest because that's what you agreed to. Okay? So that's what you have to record is when you make a payment. So this is you replenishing the credit card. Now again, every time you pay your credit card off, what happens? I now have a credit card that's full of money to spend. Okay, so there you go. Any questions in regards using a credit card?
No.
Okay, and of course you take off that amount out, and now you owe nothing. And of course, if you decide to increase, or close out your credit card, of course, there's no entry there because again, who is able to increase your credit card limit? Your credit card company. So you have to apply for that. Okay? And then of course, if you need to close out your credit card, how do you do that? You pay off the credit card and then you call the credit card company and you close it out. So in this case, nothing needs to be journalized there because that is something that you have no control over. Okay? Except for closing it out. Okay? So let's talk about cash shortage and cash overage. Okay? So again, going back to petty cash, oftentimes when you are looking at a cash shortage or a cash overage, this is why accounting is so important. You need to match your numbers accordingly. Now again, there are many reasons why you can get a cash shortage or a cash overage. And those reasons could be maybe somebody decides to forget to record. Human error is always going to be your number one enemy. Because if you're writing everything down, pen and paper, you might accidentally put the number backwards. You might put the wrong amount down. Maybe it was $56.63 when it was actually $56.36. Okay? It happens. We even type it in there. Okay? So other things can happen too is maybe someone forgot to record something. Maybe you dumped the money into the cash register when you weren't supposed to or accidentally did that. Anything can happen. Or maybe the owner decides to say, hey, I got some loose change. Throw it into the petty cash drawer. Anything can happen, and that is exactly why you would have a cash shortage or a cash overage. So let's take a look at an example of how you can have a cash shortage. Okay, so for this example, right, this is usually when we're replenishing our petty cash drawer. Okay, so on June 1st, you establish your petty cash drawer to be a total of $600. At the end of June 30th, you need to replenish the petty cash fund, right? So you end up counting all of your total receipts, and you only have a total of $590 in receipts, and you have zero cash left remaining in the petty cash drawer. So, right? What our rule of thumb here is that we always have to have the total amount of receipts and whatever cash that's in there. The box must always have a total value of whatever you establish your petty cash drawer at. In this case, I am at $590 in my petty cash. So, of course, what I do is I'm going to recognize all of my expenses, and this is what I'm going to recognize. I'm supposed to have a total of $600 in my petty cash drawer. Why is it that I only have $590 worth of receipts? I am missing $10. So what's going to happen is that's where you're going to establish that you are short in cash. Okay? And it's for that $10. And what happens is you still are going to write a check for that $600. Only thing that you establish here, right here, this cash shortage is going to be a loss. Okay? So it's going to be considered an expense account. Okay, so this is a loss here because you were short on money. You lost money somewhere. And the petty cash drawer must hold its value of $600 at all times unless you choose to decrease it. In this case, that's why I have to write a check out for $600 because your petty cash drawer has to be always at $600. So once you've done that, right, what happens is you are not going to go ahead and continue on with your day. You're going to investigate where that $10 went. Maybe the boss decided to take it because it's his money, right? He owns the business. He can take money wherever he wants. Maybe he took that $10 to go buy something. I don't know. So again, maybe he took the money for something. So again, and he didn't record it because he doesn't need to. He's the owner of the business. It's his money. So maybe he took the $10 that was left remaining in the petty cash drawer and no one recorded it. So that's why it's missing $10, right? You're going to have to investigate where that missing money is because, again, you don't want to have people stealing or misplacing or transaction that's not being recorded that should be recorded. Okay? So that's an example of a cash shortage. What about a cash overage? So same scenario, June 1st, you still have a petty cash drawer that you established at $600. And of course, you have at the end of June 30th, you're going to replenish the petty cash drawer. So here's what's in there. You have a total receipts of $600 and you have $20 cash left remaining in your register. Okay, so what are you going to do first is record all your expenses. So then what happened? Why is there now all of a sudden an extra $20 in your petty cash drawer? So what you're going to do is now you're going to recognize that you have an overage. You have too much money. You have $20 in left remaining in your petty cash drawer. So that means all you need to do is write a check for not the exact amount, but for whatever amount that equals up to $600, because in this case you have leftover cash. Then, of course, what are you going to do? You're going to investigate where that extra $20 came from. So maybe the boss decided to say, oh, since I took $10 from yesterday, I'm going to throw in my $20 bill because I only have a $20 bill into the petty cash drawer. Things happen, okay? And if you're not keeping a really good track record of it, then they will happen. So again, oftentimes, like I've mentioned, right? Cash registers. Customer tells you, keep the change, and you just put the money back into your cash register. You will 100% get an overage every single time if you do that. So keep in mind, that's why they have a tip jar usually in the front, because when customers do that, you put that money separate and you calculate that money later and add it to the cash register later. You want to make sure that your total cash sales receipts match your total that's in the actual register or petty cash fund. Okay, so there you go. Chapter review, we talked about petty cash, how to establish it, how to increase it, how to decrease it, how to use the money and replenish it, okay? And of course, that's what majority of this class was about, was just the petty cash, okay? All the things that we talked about is just applied, okay? They all use the same concept except for credit cards, of course. You don't need to do anything more for credit cards. But petty cash, cash and register, they're all similar ideas. So any questions in regards to Chapter 9?
No.
All right, so let's go ahead and complete the Chapter 9 petty cash exercises. So questions 1 through 3 are related. So if on January 10th, you decided to establish a petty cash fund for a total of $250, journalize.
You're going to do petty cash?
You're going to do petty cash? Good.
Debit for $250.
Good. And where is this money going to come from?
Checking.
It's going to come from your checking account. Good. And of course, I'm going to make a note here to establish petty cash fund. Okay. Number 2, okay, if on January 12th, you took $20 from the petty cash fund, okay, to pay for party supplies, okay, costing a total of $18.57. Journalize.
You're gonna do office supplies or party supplies,
And what?
and and then you're gonna credit your petty cash for $20.
All right, rule of thumb: you never, ever, ever touch your petty cash ledger. Why?
Because it's made up of your receipts.
It should be made up of your receipts. So, do we ever journalize a transaction at time of the transaction?
No.
So we never record that we take money out from our petty cash drawer. Okay? Because in this case, right, if you were to decrease your petty cash by $18.57, that means your petty cash is going to have it's not going to hold $250 anymore. It's going to be like 230 something. So in this case, right, you never credit the petty cash unless you're closing the account or decreasing the account. So in this case, what do I do with this transaction if I decided to take money from the petty cash drawer at time and decide to buy party supplies? You do not record anything, because when do you record this expense?
Once you got the receipt for it,
Nope.
when you do the ending balance totals.
Correct. When you replenish your petty cash drawer is when you recognize your expenses. Right? Good. Number 3, on January 31st, right? You counted a total of you total excuse me, you counted a total of receipts in the amount of $179.65 and a total remaining cash of $70.35. Replenish the petty cash fund. Assume that all receipts were business expenses. So how do I replenish my petty cash drawer?
131 would be the date, and then the description would be business expense.
Correct, right? Because we said that they were all business expenses.
Right.
All right.
And the debit of 179.65. And then, so the cash would be the next one, right?
Where does the money come from? How do you put the money back into the drawer?
It would go on checking, right?
It should come from your checking account. Yes. So why can't I use cash? Well, in this case, you can't just use cash that you have laying around anywhere. It has to come from your checking account because you need the exact change anyways. Where are you gonna get 65 cents? It has to come from the bank account, from the actual checking account. So there you go. Good. And it's for the total amount of receipts, not the total amount what the petty cash drawer is supposed to be. So in this case, if I were to put back that $179.65 in there, and I already have $70.35 in there, it will bring my petty cash back to $250. Okay. All right. Next one says assume questions 4 through 6 are not related to the previous questions. Okay, so question number 4. Okay, if on February 1st you decided to establish your cash register for $500. February. How do you establish your cash register?
Cash register, debit 500.
Good. Now, in this case, if you don't have an asset that's called cash register, then yes, you can use cash register. I usually put cash in register so you kind of know that it's the money inside the register.
Okay.
Or cash on hand. Okay. For $500. And then go ahead.
Checking.
Yes, the money definitely has to come from your checking account because you need exact change. Okay, and then again, to establish okay. Number 5, if on February 15, okay, at the end of the day, you counted a total of $156 of cash receipts, of cash sales receipts, and a total of $650 cash in the cash register. Replenish the cash register.
Okay, so you would do cash in register. You do the cash in the register or the receipts first? The
Okay.
receipts, right?
Well, I established my cash register at $500, right? So that's the amount of money I have in my cash register. After my sales has been done and completed, I have $656 in my cash register right now. How do I need to replenish it?
Oh, no.
No.
No, you don't need to replenish your petty cash drawer. So in this case, no entry. Because you don't, unless you want to transfer the money in there, but in this case, that's not the correct way to do it, right? You need to put the money in your checking account, and then you need to take the money from the checking account to put into your cash register. But in this case, no, I don't need to replenish my cash register because I put more money in there, not spend the money. Okay. Number 6, if on February 28 you decided to switch from a cash register to a credit card only transactions, okay, journalize the closing of the cash register.
Okay.
You would debit cash register?
Am I increasing my cash register or am I decreasing my cash register?
Decreasing.
We are what?
Wouldn't you do checking and the amount?
Correct, because I'm closing out my checking account, right? Where does the money go? You're going to put it in your checking account. So you're going to be increasing your checking account. Okay? For how much?
$500.
$500. And then what are you going to be crediting?
The cash in register.
Yes. So in this case, that's the huge difference here is because I'm taking money away from my cash register and I'm going to be putting that money into my checking account. So that's a huge difference that you need to know here. Okay. All right. So assume that questions 7 through 9 are not related to the previous questions. So question number 7. If on April 1st you applied for a Visa business credit card, okay, and got approved for a total of $1,000 credit limit, okay, with interest, of course, of 18% APR on unpaid balances, record this transaction. So how do I record that I got approved for a Visa, for a credit card, a business credit card?
You wouldn't because you haven't used any of it yet.
Excellent. No entry because we only got approved. There's a condition that must be met with the credit card, right? We need to spend it. In this case, all we did was just receive, and we know what our credit limit is. So in this case, this is pertinent information that we can put in our notes in the financial statements. But the idea here is, yes, you got approved of $1,000, but did you spend it? Did you start borrowing right away? Did you borrow the $1,000 right then and there? No. No transaction was actually made. Okay. Number 8, if on April 10, you purchase office supplies for $56.85, and of course you used your business credit card, okay, to pay for the purchase, record this transaction.
Okay. So it would be office supplies for $56.85 under debit, and then it would be business credit card.
Business credit card, whatever it's called, Visa credit card, Visa payable, whatever you want to call it, Visa payable.
And then credit $56.85.
So again, because we're crediting a liability, boom. That's it. We just borrowed the money just now. Okay? Good. All right, number 9. On May 1st, you end up receiving your credit card bill. Okay, and of course, you have a total purchases totaling of $568.49 and an interest of $8.53, totaling up to a current balance, statement balance of your $577.02. You paid the credit card bill with a check. Okay? Record this transaction. Okay?
Okay. So it'd be the date and then Visa
Visa, good.
and $577.02 for debit.
Not $577.02.
The $568.49.
$568.49, because that's the money that you actually spent. What else
Okay.
is included?
The checking that your checking account.
Okay. How much is my check going to be for?
$577. So under the Visa payable, you put interest.
Yes. So you have to remember, interest is always going to be separate. It's a separate cost of borrowing a credit card, borrowing a loan too. So anything that you have to collect extra interest is, you're not paying off for what you owe. You're paying on top an additional payment, additional fees. So that you're going to record that as an interest expense for how much?
Oh, $853.
$853. So here, this is what we owe. This is my interest I was charged for, and this is my payment. So that's how you have to understand it. Now, this will make more sense as we go take a look in chapter 10.2, where what happens when we take a loan? How is interest collected, and how does my payment affect my interest? It doesn't. You're gonna see that. We're gonna see that when you make a payment, it barely reduces your principal. Okay, but there you go. That is correct. Okay. Number 10, if you establish a petty cash fund for $200, and at the end of the month, you calculated a total receipts to be $155.20 and a total cash to be $50. You have a blank in your petty cash fund.
You have a overage.
You have an overage, right? Because $155.20 plus your $50 is going to give you $205.20 when you establish your petty cash at $200. So you have too much money in your petty cash drawer. Okay? And then last question of the day, number 11. If you establish a petty cash drawer to be for $200, and at the end of the month you calculated total receipts to be $150.54, and cash is $24.46, you have a blank in the petty cash drawer. You have a shortage, right? Because here you have $150.54 plus $24.46. You're short by roughly $25. So in this case, you have a shortage. Okay. All right. Good job, everybody. So, any questions in regards to petty cash and using a business credit card or anything like that?